A few years ago, my own business was all over the map financially. To pay myself, I would kind of go into the business, take $1,000 here, $2,000 there, whenever I needed it. Honestly, I was treating the business as a piggy bank. And this really made it very, very difficult for me to know where I stand financially in my business when the cash is going up and down, and I didn't know if it's because my business is doing well or bad, or if I was just taking more and less out of the business. Something I did that I think a lot of entrepreneurs would benefit from is to set a standard flat amount that we take out of our business each and every month. And not take more if we have a good month and not take less if we have a bad month. Now, obviously, if you have multiple bad months and you can't afford to pay yourself as much, sometimes you just gotta live with a little bit less. This all reminds me of a time when I was in a company. I was brought in to take a look at their profit issues and their cash issues. And pretty quickly, I saw the owner was making the same mistake that I had made. When I asked my client how much money they thought they were taking out of the business, he said, probably about $10,000 a month, so 120 grand per year. When I dug in, I discovered that he'd actually taken about $185,000 out of the business. Now, seeing as the business only had about $10,000 of true operating profit, that extra $65,000 that he was taking out of the business was a big deal compared to the tiny margins that the company actually had. I've also had situations where there were two business partners that were more or less owning the business 50-50, and they were both working in the business full-time, giving their full-time talents and energy. And unfortunately, when we did a similar exercise, I discovered that one business partner was actually taking a lot more money than the other out of the business, and they didn't even know. So I think that it's essential, especially if you've got a business partner, that you have a clear discussion about who can take what amounts of money, under what conditions, and under what frequency. And as long as that's clear and on the table ahead of time, everything can stay cool. Another way that we fool ourselves as entrepreneurs with how much money we take out of our business are the expenses that we bury in the company. For example, your cell phone. If you were an employee of your business, like you were an everyday 9-to-5 worker, you probably would not be able to write off the cost of your cell phone. But because you're the owner of the company, you can bury that expense in the business as a business expense, and now you don't have to pay for it personally. Now, we may think that we pay ourselves $10,000, $20,000 a month, something like that, when in fact, as we dig into the expenses that we're burying, sometimes it's an additional $5,000, $10,000 per month, and that can add up very, very quickly. There's a process that happens when a business gets bought or sold called normalizing the financials. And what that is essentially we're trying to establish the true profitability of a company, minus all of the buried expenses that the entrepreneur may have put in there. What the acquiring party wants to know is, if this business was run entirely by employees, there was no owner-operator in there, what would the income statement actually look like, the balance sheet actually look like, the statement of cash flows actually look like? Because they want to know, if they're just going to be an armchair investor, what is this going to look like? And that process includes what are called add backs, where we would say, ooh, the business deserves to have, let's say, $150 per month more profit because that expense for the cell phone wasn't really a business expense. That was just the owner burying a personal expense in the business. So a handy way to identify those kinds of non-normal revenues and expenses in your company is to ask a question like, if I were to replace myself and pay someone as an employee to be the CEO of my business, what revenues and expenses would be added back or removed, and where would that leave my company financially? If you're like me, I bet you would not want your new employee CEO to be burying his whole family's cell phones in the company's financials. That's kind of what I mean. Now, is there anything wrong or illegal to bury some of your expenses into the business? Well, that's definitely between you and your accountant to sort out what is onside and offside relative to the authorities. All entrepreneurs bury some amount of expenses into their company, and you just got to make sure that you stay compliant and are only burying what's acceptable. It is a gray zone, and you got to decide where you want to land in that gray zone. Certainly, I'm never going to condone you doing anything illegal, and so that's why I highly recommend that you speak to your accountant before you make any kind of moves on what you do and don't write off inside of your company. And of course, be honest with yourself, if no one else, about the impact of the expenses that you are expensing to your company and how that affects your profitability and your cash.